1991, India opened its door to the world. With the economic reforms of 1991, India would switch from being a closed socialist economy to the process of liberalization, privatization, and globalization. India was now the new kid on the global scene. Today, not many remember a pre-reform India. We are, after all, a young nation with over 47.9% of the Indian population under the age of 21.
For a large part of our country, reforms and the impact that they have had on the economy is simply taken for granted because they haven't known a pre-reform India.
Manmohan Singh, then a finance minister presenting the budget, said, "No power on earth can stop an idea whose time has come. Let the world hear it loud and clear. India is now awake. We shall prevail. We shall overcome." It was while delivering this speech that Manmohan Singh made one of the many key announcements: the partial convertibility of the rupee, which would make it easier to convert to other internationally accepted currencies.
Over time, that turned out to be such a transformational decision because it opened up markets, it opened up Indians to the rest of the world, just ordinary Indians. I'm not talking about businesses which could suddenly, do business, import, trade with far less difficulty than they had faced earlier. When that announcement happened, I immediately called a friend of mine who was a foreign exchange dealer in one of the foreign exchange brokerages in Mumbai. He said, "Hang on quietly and I will conference you onto a call with some other foreign exchange dealers. We're going to discuss the implications of this measure." The point was that even that conversation at that point of time, a conference call which now today any Indian can do on his mobile phone, that was practically unknown in India. Just for ordinary Indians, they can do things which just 25 years ago required applications in quadruplicate and government clearances at half a dozen levels, and that is the true meaning of reform as far as I'm concerned.
From a few phone lines to the ubiquitous smartphone, once the Indian market was open, there was a revolution waiting to happen: the telecom revolution.
Perhaps the changes brought about by the telecom revolution have had the widest and deepest social and economic impact. A farmer in the field who can now know the price of his produce even before he leaves his farm. A patient can consult leading doctors without traveling miles. In a sense, mobile has been a great social leveler. In 1995, the center decided to give out mobile licenses. But even then, at ₹16 a minute, and devices costing over $500, no one would have thought that mobile could have become what it is today. The two big developments that helped mobile telephony to become affordable was the new telecom policy of 1999 and the calling party pays regime in 2003. From 1 million mobile phones then, we now have over 1 billion users. Only about 1/3 of the country have access to high-speed data connectivity. The important thing to note is that the best is yet to come.
The benefits of the telecom revolution are there for Indians to reap. Another key sector that keeps the economy well-oiled and running gained momentum too. Since the economic reforms of 1991, the energy sector has seen a new dawn.
Back in 1993, when I first started covering the energy sector for BusinessLine as an analyst, we had very little oil refining capacity in the country. We were importing a lot of products such as petrol, diesel, cooking gas, which is LPG, and various other petroleum distillates. From there to now, when we are actually exporting petrol and diesel to the advanced markets, we have come a long way indeed in 23 years. A lot of this, the credit should go to the private refiners, which are Reliance Industries and SR Oil. There were no private refiners back in 1993. It was all the public sector oil companies: Indian Oil, Bharat Petroleum, Hindustan Petroleum, and IBP. So Reliance has single-handedly developed the private sector refining in India and later on joined by SR Oil. We may have our quibbles with the way Reliance built up its assets, whether it's been shareholder friendly and all that, but we can't deny the fact that it's built excellent assets on the ground that process some of the most complex crudes available on earth to produce the best products that will pass the markets in the West. So this is a sea change for the country in the sense that today petroleum product exports account for a major part of our export basket, so much so that in the last year and a half, they have been the singular reason for dragging export growth down because petroleum product exports have come down.
It isn't just the large companies of the telecom and energy industry that have benefited from reforms. Indian markets too have charged far ahead of where they were in the period before 1990s. From the time of physical shares to demat, from sourcing annual reports from Radhiwalas to quarterly reports in your inbox, the markets have changed radically over the years.
Today, small investors view the ability of FIS to call all the shots in the market, and they think big institutional players have a complete advantage over them. But 20 years ago, the situation was completely the opposite. Without institutional investors in the market, the only sets of players were the retail investors and the very smart set of brokers who could operate stocks and call all the shots in the markets. Therefore, if you wanted to put through a trade on a stock, you had to call a broker, and often he would not even take your call because you were such small fry. And if he did take your call, he would execute it at his own leisure and you would not get the price that you wanted. Those were the days of physical share certificates. So if you actually wanted to buy a share, you had to make sure that the counterparty really had the shares with him, and then the transfer would take weeks. By the time share actually came into your hands, you would not be sure of making a profit on them by trading them. It has been thanks to SEBI's efforts in upping the disclosures required from companies that the offer documents for IPOs have gone from being the size of a tinkle comic to being the size of a Bhagavad Gita or a Bible. They are this fat now. Whether you will be able to read the whole thing itself is doubtful. But then what we should see is that small investors over the years have got freedom from a lot of things, from tipsters, from operators in the market, from people who share insider information, from people who con them based on fake share certificates and so on. Whether it's all this has made it easy for people to make money on the market? No. But then people are also getting smarter by the day, and surely retail investors also have a place in the market even today.
It wasn't just the physical share certificates or telephones that you had to wait for. Pre-reform India faced yet another key difficulty: transport. There were just a few options for those who wished to buy cars and two-wheelers. Once you booked your vehicle and made the down payment, you would have to wait for months, if not a year, for the vehicle to arrive.
But the real takeoff for the automotive industry came, of course, post-liberalization in the 1990s, and the late 1990s saw most of the investments that happened in the automotive industry. Of course, we saw a flood of new brands, investments, and products flow into the country. When I started out covering the automotive industry in the 90s, there were just two car companies that really we wrote about, and about a couple of two-wheeler companies that got written about more often. But after that, there's pretty much no brand, automotive brand, that does not exist in India now. Starting from Daewoo and Ford that started out investing in India, and then Hyundai, of course. Today we have pretty much every single brand in the luxury car space, in the luxury biking space, and in all the other segments of the automotive industry. From there on, of course, we've also seen a lot of new vehicles investments coming from Indian automotive companies like Mahindra & Mahindra and Tata Motors. But two aspects of the change, though, during the last 2 decades would be significant. One is the emergence of India as a global hub for manufacturing, components, parts, and to some extent export of fully built cars. But more importantly, the other, of course, is the emergence of a wave of global acquisitions that have made Indian companies multinationals, Indian auto companies multinationals.
The economic reforms of 1991 set the country on the fast lane to development. Sectors such as banking, pharma, insurance, infrastructure, and real estate also benefited from various reforms over the years. In the last 2 years, the Narendra Modi-led government has ushered in a slew of reforms in core sectors such as power, mining, metals, and infrastructure. But India is still a long way from the heydays of a high growth period. It needs to get on this growth path quickly to sustain its growing and young population. In this process of development, many have been left behind. Well, let's hope India does overcome and prevail.